Are real estate investors under attack again? This month, the Senate Democrats have proposed the American Home Ownership Act to get housing back into the hands of the American people. Today, we want to talk about this proposed bill. What are the proposed changes and how is it going to affect us small time real estate investors? But first, why are they proposing this bill? Well, it's no secret that over the past years, house affordability has been top priority. It's become a big issue from rising home sale prices to increases in rent. Affordability just remains a top priority for most Americans. Senators and representatives are trying to come up with ways to help us out. What has contributed to this home affordability issue? Well, number one is, of course, the lack of inventory. We are just not building fast enough with the population growth, trying to keep up with it. And there's just not enough homes on the market coming available, especially the past years where we had the interest rates of like 3 point whatever percent. And so people are not wanting to move. They don't want to sell the house because now we have like higher interest rates. So there's just not a lot of homes being put on the market. Plus, not keeping up with the inventory, not building fast enough. So all of that has been affecting the housing market. And so it's no surprise that prices have been going up, which of course has also resulted in more people out there looking to rent, which has affected the rental market. And so with more tenants means more demand. And so there's an increase in rents. But one of the main issues is the idea that big corporations like hedge funds and so on have been buying up the single family homes that should be going to like first time home buyers or just people that are trying to like downsize, just the regular American people. And so on top of the inventory being low, then you have big corporations buying these single family homes. But how true is this? Well, according to Realtor.com, these large investors only accounted for less than 2% of all single family home purchases in the past few years. I think the max was at 3.5%. I think that was in like 2022. But we have some thoughts on this later in this episode.
What are some of the proposed changes? First, they want to remove the deduction for depreciation and mortgage interest payments. And when you invest in real estate, one of the advantages is that paper loss, right? The advantages is the depreciation and what you can write off on the mortgage interest payments. The tax benefits that include a deduction and appreciation of property from the wear and tear are called depreciation. It is very controversial to see that the proposed changes is to remove that first. Another proposed change is prevent the purchase of foreclosed single family homes sold by Fannie Mae, Freddie Mac, or the U.S. Department of Housing and Urban Development. This is already kind of in place. So for a lot of the foreclosed homes that you bid on auctions, like hoodesa.com or homestore.com, even if you bid as an investor, most of the bids that are accepted will go to first home buyers already. So they're putting that in the legislature, it sounds like. So it will just only be stopping you from bidding at this point. And another change is to be banned for federally backed mortgages. And so I'm assuming that corporations will not be able to get FHA backed mortgages or even conventional backed mortgages. Who is affected? So these entities, these corporations are going to be affected if you own more than 50 single family homes. So there is already a delineation on the legislature. So 50 or higher. Another person that's affected or company is hedge funds. So if you're hedge funds, they're going to be banned from buying single family homes and private equities. So this might be a little bit controversial too, because private equity, there's a loan product called DSCR, which is backed by private equity. So I'm not 100% sure how this is going to move into the DSCR. It may affect the amount of DSCR loans you may see. a skimming or skinny DSCRs for now, or a little more less appropriate for lending since private equity is not able to invest in um, homes now. Another affected entity is REITs, which are companies that owns and operates finances income producing real estate. Model mostly after mutual funds. You own shares of the real estate and therefore they get dividend based income and total returns. I used to look at REITs and think about buying into REITs just to own a share of a property, just like as stocks do. It's a great way to invest in real estate without having to manage the property and having a team that it's already managing, acquiring, dispositioning the property. Who is not affected from this bill? Small time investors. So that would be like yourself, if you own less than 50 single family homes. So Violetta's in this bucket, I am in this bucket. Commercial real estate. So if you own commercial real estate, you are not also affected. This is only for single family homes. And I think that, like Violetta mentioned, the bill is intended for first time home owners to go and acquire that single family home. Who also is not affected is nonprofits and builders that improve house affordability. So corporations that are acquiring, let's say, land or previous commercial buildings that want to enforce equity by renovating or rehabbing or even building, these are builders, these corporations that will not be affected. Rehabbers that bring home into the markets, like ourselves. So if we are buying something that's, for example, depleted, abandoned, cave in, and we are going to renovate the property, then it's not going to be affecting us.
Now let's get into some of our thoughts because I have a few thoughts. Lynn has a few thoughts and how it may affect small time estate investors because it's no secret that real estate investors have a negative stigma, of course. I mean, there's some reasons for that, of course, because you have like the slumlords. And then again, we're talking about these big corporations that will buy up homes and increase rents and all that. Sometimes like one of the things we kind of question ourselves, and I know, especially at the beginning, I would question is like, am I part of the problem? Am I contributing to the house affordability issue? And so I have a few thoughts on that because I know a lot of people that are interested in investing in real estate. That's kind of one of the things that they have to navigate as well. And that's one of the things I hear is like, oh, I don't want to be part of the problem or whatever. But again, this is mostly for big corporations. About that are buying these single family homes. Lynn and I, we promote be having a balance, right? Like obviously we want to make money because we want to gain financial freedom and build, you know, generational wealth or just wealth in general. So that way we could, do whatever we want in life and not have to be in this rat race. So some of the things I have to navigate is balancing, like when I acquire property, is making sure that I'm providing safe housing, following the regulations, and doing everything I can to keep costs low. And I know we also saw that I mentioned earlier of how the big time investors only made up like 2% of the buyers of single family homes. But Lynn was saying there's actually some markets that have a higher percentage.
If you look at the stat that Realtor.com accounts, corporations only account for 2% of the buying power for single family homes. There are some problematic places like Atlanta, Dallas, like Tampa, in which the corporations make up 30% of the buying pool. So we do see like corporations taking over in these cities, and that is your competition, right? If you're not only an investor, but if you're just buying your first home, these corporations are coming and taking over these metropolitan areas like Dallas and Tampa, and you're can compete with the corporation, right? As a small person, let's say your first time home buyer, uh, that you're not going to be able to compete, and then that is a problem. But and across the border, the majority, it's not going to make, in my mind, a big difference Yeah, it is. I think it's more of a, if I'm getting political here, it's more like a piecing the left versus the right. Is it in the right direction? Yes. But it's not particularly going to change the real estate market. But I do see that there may be, since private equity is out of the equation, right now, and private equity does not directly invest. We have private equity investors that lend their money via the ACR. So I wonder if that's going to dry up because over the course of, I don't know if it's over the course of the last 5 years, but was made aware that the SCRs became such a known product, so much so as conventional for investors, for small investors like us. So that may have impact in how much DSCR lenders we have available.
We can also be part of the solution. Matter of fact, I know a builder in Dallas. And that's one of the things that she really advocates for is making sure that we are making more, affordable housing. And there's another one that's on the outskirts of Dallas, making building affordable housing as well. And so there's builders out there that are trying to improve as well. So um, I guess for them, it would not really affect them since, again, part of the exclusions would be if they're helping improve housing affordability. To me, the biggest issue from owning properties over several years, I it's easy to like kind of blame these big corporations, and in some areas, yeah, like Atlanta, Dallas, and Tampa, like obviously it is a problem in there, but for most markets, the issue to me, and especially here in Texas, is more of the property taxes has increased. Of course, the high interest rates is an issue, but the high insurance. So to me, is the property taxes and the high insurance that has been an issue in me struggling to keep rents low because I've had to uh, obviously increase over the years, but my property taxes have increased, the insurance has gone up, but also the cost of materials and labor to be able to rehab a house, to even if not rehabbing, just hiring a handyman. Like I've noticed that trend. So now it's a lot more money coming out of my pocket and makes it harder with this housing affordability. So I think for me, I would like to see something in that. I think that would make a bigger impact, and it would help not just real estate investors, but just homeowners that are currently also struggling with the high property taxes and with the high insurance.
Yeah, I think that you're right. It's very hard to see if that's ever going to happen with insurance since it's private companies and regulating different government regulating private companies is like trying to regulate the market, right? And then so everybody gets into like the weeds of, well, the government shouldn't be able to regulate private companies. But at the state level or the municipal level, property taxes can be influenced by how active you are. So this is not your civic duty, but yes, at the municipal level, county level, you've seen that property taxes can be influenced very easily, especially in blue and red states. I don't know how much influence it needs to take, but your vote does count in that particular regard.
I forgot where they were trying to build, and I think it was an AI data center, and so they were gonna take up, like, water and stuff like that, and that community, last that I knew, like, they came together, went over there, and, advocated, and I think they have at least stalled it. I'm not sure what, has, happened yet, like, what's going on with that, but they are fighting that, and so I think with the property taxes as well and insurance. Well, insurance again is kind of like a little tricky because how you control like these private companies, but property taxes, like some tax breaks. So I'm not sure what the solution is, but we need to figure something out because these taxes are going like super high. The insurance is getting high. And then with the tariffs and the cost of materials. And then with everything with the immigration going on, that's labor, that's skilled labor that is, gone. And so now you're going to be fighting, trying to find somebody that's skilled in doing like a rehab and construction or whatever. And so price is going to go up. Plus the materials. I know when I was we were building this house, it's I'm in a manufacturer house. That was a concern because of the tariffs. We were worried that it was going to increase our costs. Luckily, we had kind of like finalized our paperwork before like that took into effect. So, yeah, those are other things to think about as we continue as real estate investors.
What you want to keep in mind is, are we in a buyer's market? And I would argue that we are right now. Not only in most Midwestern markets is it's winter, but transactions have gone way down, right? Over the last since August up until now, transactions have like half in comparison to other years. And that means there's not as many houses being closed, or houses are falling out of escrow for different reasons. Houses are staying longer in the market for different reasons. And this is where the opportunity comes if you're thinking about buying into real estate. If you're, thinking about sending a disrespectful offer, this is the time for that. And then, so one of the things for the future that you have to watch, if you know about your market, you know where you want to invest, you need to know your days on market. So if a house is selling in 30 days, and you see in the house sitting in MLS for 45 days, then you know that possibly that seller is already a little bit motivated, because normally it will take 30 days to sell the house. Now it's sitting longer. So this is you're in, right? This is when you start having a conversation. And if you're a little bit smart about it, you wait for the house that it's already past those 30 days. You don't offer on the house if it's an investment and not something that you're going to buy for your family. You're not gonna just put an offer the week that it came on the market. Another thing for investing in the future is um, mortgage interests. Mortgage interest rates are coming down. So if you refer to episode 20 from our podcast, we just cover where the interest rates are coming down right now. Actually, I think conventionally, it's a 5.99 or something like that. Also, the effects of reduced migration for Trump's ICE, resulting in less migration as well. Many skill jobs like construction that direct impact real estate, whether rehabbing or finding a handyman, may be more difficult. And this is what Violetta mentioned for what we having a lack of labor, right? For many, how the climate is going on in our environment right now. So these are things that you have to keep in mind when you're investing in real estate, specifically if you're doing big rehabs or just not buying turnkey. So let us know in the comments what you think of the proposed bills. Don't forget to subscribe or follow, and we will see you on the next one.